Investing wisely becomes even more important in retirement if you want to make sure that your money lasts as long as you need it to. The problem is, a lot of the common advice given for investing in retirement isn't always the best strategy for everyone. So, this begs the question, what investment strategy best suits you? Well, that's what we're getting into in today's video. Hi, and welcome back to Stop Being Sold. My name is Michelle. And I'm here with Brian. And today we're talking about the most common investing advice for retirees and the factors that you need to take into consideration so you can decide for yourself what advice will help make your retirement savings last. So, Brian, we have a lot to get to today. I'm going to just go ahead and turn the mic over to you. What do you have for us?
As you move into retirement, your investments change and how you invest also changes. One of the first things experts say is for you to take a conservative approach. They say that with your shorter time horizon, you can't afford to take on much risk, and they advise you to shift some of your holdings from stocks to bonds and even to cash to preserve your capital.
Right.
My caution for that approach is if you're being too conservative with your investments, especially right now, it could open you up to inflation risk. The risk of being too conservative is that your savings do not keep pace with the rising cost of living today.
So if you have too little in equities and way too much in bonds right now,
or even cash.
Okay, and even cash. My question then is, what should people do? What's a good mix where you're not too conservative, but you're also not too exposed to too much risk?
All depends on your personal risk tolerance and what do you need access to in retirement.
Okay.
Some questions. Are you living off your investments? And what I mean is, are you pulling a stream of income off your assets to supplement your Social Security and pension? If so, how much income do you need to take from your investments? Some folks just may live off the dividends from their stocks alone. For example, let's say you need an extra $500 a month and you own, let's say, 100 shares of IBM.
Okay.
Currently, their dividend pays $6.64 per year per share. On 1,000 shares, Michelle, that's $6,640 a year, or $553 a month.
Yeah,
it's a lot of money. So staying invested in this stock may make sense right now. It provides you with a steady stream of income that you need. Others may say, you know what? I'm scared to death of losing what I saved. So give me the highest fixed rates I can get today. And they may just go into a high yield money market account or even CDs. Again, it comes down to your personal preference.
And how much risk you can afford to take.
Exactly. It's all about you. Who are you in retirement?
I think that's the key here. What do you need to do? Where are you? What do you have? What are you drawing money from? And what are you comfortable with?
Right.
All right. What's the next piece of advice?
You're usually told as you near retirement, it's time to start taking distributions from your assets.
Right.
And to take from the highest earning investments that can help you out and supplement your Social Security and your pension payments. But here's the problem. My caution is that many focus on high yield income investments. And by relying on them high yield income investments, this may open you up to what's called higher default risk.
So clarify that for me. High yield income investments like what? Like high yield bonds or what?
Yeah, it could be like high yield junk bonds or dividend paying stocks that, think about this for a minute. Let's say that dividend paying stock fell and let's say it dropped by 30% in value. And all of a sudden, the company has to cancel their dividends or maybe even lower their dividends.
And that happens. It happens.
It does happen. It happens quite often. And that's why they say not to chase these high dividend paying stocks for this specific reason. And it changes the income that you were actually counting on.
So it doesn't mean you can't have them in your portfolio. It's don't rely on it.
Yeah, don't rely on it or have too much exposure to it.
Okay. All right.
So, and let's say you decide to invest in a dividend paying stock just because the market was down and the dividends are paying like 12% or even 15%. That's very common over the last few years. You start thinking, oh, yes, we're going to lock in this dividend. And then all of a sudden that stock's no longer performing. And you got to, let's say the company cancels your dividend or they take back your dividend. This is very common. You could lose principal on the stock if it falls further, and the income from your dividends were cut. So it's a double-edged sword.
Sure.
Same thing with REITs right now. I'd be cautioning that because REITs or real estate investment trusts, what happens if we have a collapse in the commercial market? They've been predicting this for quite some time.
Yeah, it's not looking good.
No, it isn't. It hasn't come yet, and that could be a whole different ball game on that side. So,
Right.
so having too much of exposure in one area is a problem, and that leads to the third thing we want to discuss is your asset allocation.
Yeah.
What is it? Do you know what your allocations are? When was the last time you rebalanced your assets so they have an appropriate amount for your age and your risk tolerance?
Sure, sure, sure.
It's funny, Michelle, many advisors in the industry use the rule of 100 as an example,
Right.
meaning that if you're 65 years old, only 35% of your assets should be in equities and 65% should be in bonds. Well, what about the folks who did this? And over the last 2 years, the Fed was aggressively raising interest rates at the
Yeah.
fastest rate in history.
They're
Guess what?
screwed.
They're underwater right now
Yeah.
and could be pretty substantially.
I was gonna say pretty substantially.
Right,
Exactly.
right.
So you're looking to have a good mix of stocks, bonds, and other assets to mitigate risk,
Yes.
and then make
So,
sure they're balanced.
yeah, make sure it's balanced. And this way, if one stock or bond falters during a crisis, the others help support them
Yeah.
and cash on hand for emergencies.
Yeah.
Most people don't think that rebalancing, think about it even at all. And it could throw your asset allocation out of whack over time, which could give you an inappropriate risk profile for your age and for your goals. It goes back to understanding again, who are you in retirement?
Right.
How much income do you need to come in on a monthly basis to help out with your Social Security and your pension income?
So here's a question for you. How often do you recommend people rebalance their portfolio?
I would say at least look at it on a quarterly basis. So
Okay.
every 3 months, take a look at it, see if anything's out of whack. The market moves pretty quickly. We just have a massive move up in the market in November, December
The end
last
of
year.
last year. Yeah.
Yeah, we had a 20% rise in that quarter alone. So that's a pretty big quarter. You might need to go and take a look, see if you have to rebalance now, because maybe one part of your portfolio may have risen too quickly.
Right. When you're rebalancing, keeping taxes in mind should also be part of that decision-making process, should it not?
Yes, it should, especially in cash accounts or your non-qualified accounts.
Okay.
Because every time you sell something inside a non-qualified account, it creates a taxable event. And is what you sold a short-term or long-term capital gain?
Right.
Have you held what you sold for 12 months or longer to get the long-term capital gains rate versus short-term rates, which are taxed as normal income? Remember, rebalancing doesn't mean that you're trading your
No.
account.
Exactly. All right. And I think that is key. We should have said that up front.
It is. It's a big
Okay.
part of it. So,
All right. So we're looking to rebalance or look at it at least 3 months, every three
yeah,
months, every
yeah,
quarter.
sure.
Okay.
Yep.
All right. We're going to drop a video that we did to the best states to live in retirement. It's pretty interesting what's on the list. We're going to drop that in the description below. Make sure to check that video out. If you're looking to save some money in retirement, these states might be for you. All right.
Definitely.
Also, if you like the content of this video, found it valuable, hit that like button, help us grow this channel. Don't forget to subscribe. Brian and I put out videos on the daily that help you make better financial decisions for your future. Brian, anything else you want? Any parting words of wisdom you have for us before you wrap?
Now, remember, this is your retirement, and it's all about who you are in your retirement. So,
Love it. Okay. Thanks, Brian, for this. And as always, thanks to everyone who watched.
thanks, everyone. Have a great day.